Long-term investment strategies. Long-term investment strategies focus on building wealth over years or even decades by taking advantage of market growth, compounding, and diversification. Here are some key strategies. 1. Buy and hold. Invest in high-quality stocks, ETFs, or mutual funds and hold them for the long run. Benefits: lower transaction costs, compounding growth, and reduced market timing risk. Example: Warren Buffett's approach, buying great businesses and holding them for decades. 2. Dollar cost averaging DCA. Invest a fixed amount regularly, for example, monthly regardless of market conditions. Benefits: reduces the impact of volatility and removes the stress of market timing. Example: investing $500 monthly in an SP 500 index fund. 3. Index fund investing. Invest in broad market index funds, for example, SP 500, Nasdaq 100 for diversification. Benefits: low fees, passive management, and historical outperformance of active funds. Example: Vanguard's Total Stock Market Index Fund VTI. 4. Dividend growth investing. Focus on stocks that consistently grow their dividends. Benefits: passive income, reinvested dividends compound over time, and defensive against downturns. Example: companies like Johnson & Johnson, Coca-Cola, or Procter & Gamble. 5. Real estate investment. Buy rental properties or invest in REITs, real estate investment trusts. Benefits: rental income, property appreciation, and inflation hedge. Example: buying residential or commercial properties in high-demand areas. 6. Asset allocation rebalancing. Diversify among stocks, bonds, real estate, and alternative assets. Periodically rebalance to maintain your desired risk level. Example: 60% stocks, 30% bonds, 10% real estate, adjusted as you age. 7. Growth investing versus value investing. Growth investing: invest in high-growth companies, for example, tech stocks like Amazon, Tesla. Value investing: buy undervalued stocks with strong fundamentals. Example: Warren Buffett Value versus Cathie Wood Growth. 8. Retirement accounts tax-advantaged investing. Max out contributions to IRAs, 401ks, or Roth IRAs. Benefits: tax advantages, tax-deferred or tax-free growth. Example: contributing up to the annual 401k limit and taking employer matches. 9. Alternative investments. Invest in assets like gold, cryptocurrencies, private equity, or commodities. Benefits: diversification and hedging against inflation. Example: allocating 5 to 10% to Bitcoin or gold as a hedge. 10. Patience, emotional discipline. Stick to your plan despite market fluctuations. Avoid panic selling and impulsive decisions. Example: investors who held stocks through crashes, for example, 2008-2020 saw major recoveries.
Thanks for watching.